Good afternoon. Let me introduce you to the team. Samantha, Francisco, Tomás, Nicolás, and myself, Guadalupe. We are here today to issue a sell recommendation on Enor. Enor is the largest electricity distribution utility in Argentina. It operates in the northwest of Buenos Aires city and its surroundings, covering 21% of Argentina's electricity demand. 43% of its sales is covered by the residential segment, followed by industrial and commercial users, which add up to 32%. The company was established in 1992 as a result of the privatization process, which divided Buenos Aires Public Distribution Company into ELAP, ESUR, and Enor. 51% of its shares are owned by EASA, which was acquired in 2007 by Pampa Energía, the largest fully integrated electricity holding in Argentina. So, why is Enor a sell? After Argentina's dramatic crisis in 2001, the government passed a law of public emergency, which has been repeatedly extended ever since. Since then, automatic previous rate revisions were withdrawn, and the national government was empowered to regulate all utilities and set rates prioritizing social needs. Since then, price and salaries index have grown over 1,000%, raising 13 times monthly exploitation expenses per client. In contrast, the distribution added value rose only 64%. This is the cost increase that the government allows Enor to pass through onto rates. Government relief became unavoidable. We identified 5 different sources of subsidies we'll discuss throughout the presentation. Now, this current scheme is unsustainable. Subsidies to oil and energy account for 5% of GDP, leading to escalating fiscal imbalances. Subsidy and rate policies are expected to change, mostly after the newly election of the party Let's Change, which took office yesterday. The market is anticipating a rate increase. However, this can't take place overnight, and it will come at the expense of subsidy cuts to Enor. We will argue that current market prices do not accurately reflect this reality.
After the privatization process in the 90s, the electricity sector was divided into 3 main areas: production, transmission, and distribution. And Gamesa, a semi-public company, became the intermediary among different market players. In this context, Enor acquires energy from Gamesa at subsidized prices. In gray, you can see the Enor's cost of energy purchased from Gamesa, and in gray, the real cost of energy without subsidies. This is what we call Subsidy 1. In 2004, to encourage energy saving, the government introduced the Pure program, which is an additional charge for customers who consume more energy than in the previous year. Although this income had investment purposes, the government allowed Enor to keep this fund. This is what we call Subsidy 2. In 2005, the government signed the adjustment agreement, which included a rates review, but that was not implemented. In 2012, as a compensatory mechanism, the government introduced the FOSEDE fund to finance capital needs for Enor and ESUR, and this is what we call Subsidy 3. Also, current regulation prevents Enor from distributing dividends and has given the company new subsidies that Samantha will explain later. Regarding industry, Enor's rates are one of the lowest of Latin America countries and local peers. Residential consumers spend little more than $3 every 2 months, which costs less than a Starbucks coffee.
Enor's main growth drivers are GDP growth in Buenos Aires and extreme temperatures, which push mainly the energy demand from the industrial segment and households respectively. We developed a regression model against this variable and found a strong correlation. Measured in quantity, sales have grown at an annual average of 3.8% in the last decade, slowing down in the past few years. In terms of indebtedness, Edenor's financial debt is composed of 2 bonds due 2017 and 2022, for a total outstanding amount of nearly $190 million. Measured in Argentinian pesos, debt has recently increased, as both bonds are denominated in US dollars. But there is also a second source of financing. Besides acquiring energy at a low cost from Gamesa, as Nicolás explained, the government has allowed the company to defer these payments to its supplier, and this is what we call Subsidy 4. This way, Gamesa has become Edenor's main creditor, with a total outstanding debt that more than doubles the financial debt. For this reason, and although Gamesa's debt is included within the line of strict payable, we believe it has a clear financial nature. And now you can see how the ratios change dramatically when Camesa's debt is included. As regards profitability, Edenor's fundamentals differ greatly when we include or exclude direct subsidies. In the last 3 years, the company received subsidies for over $700 million to account for accumulated cost increases from 2007 onwards, which were used to cancel period payables and debt with Camesa. This year, it received additional subsidies for close to $400 million as compensation for not having implemented the rate revision promised 10 years ago. And this is what we call Subsidy 5. In the last 12 months, EBITDA, which is positive at $260 million, turns into a negative result of nearly $300 million. Now, if all five subsidies mentioned are taken into account, we estimate that the sum adds to an amount of $1.9 million in the last 12 months.
We developed a risk matrix in order to better understand and describe the likelihood and impact of the risk that Edenor is exposed to. As Samantha mentioned, GDP growth is a main driver of energy demand. Economic growth has declined over the past 4 years and could be worsened by the upcoming fiscal adjustment. High inflation, about 25% annual, increases Edenor operational expenses and hurts profit margins, especially if rates are not adjusted. About 90% of the employees belong to a strong and unionized labor force. Edenor could be subject to organized labor actions, including strikes and salary demands above market average. A devaluation of the Argentine peso, expected in early 2016, could increase Edenor's foreign currency debt burden and deteriorate its ability to earn its debt. In terms of market risks, there are two issues. First, since late 2011, Argentine authorities have blocked the access to the foreign exchange market. This has turned Argentine bonds and ADRs into a means of acquiring foreign currency abroad at an implicit FX rate, adding extra volatility not directly linked with company fundamentals. Second, Edenor stock has a small market volume, with an average daily traded volume of 1.2 million USD. Regarding corporate governance, the company's complex and ever-changing regulatory framework can complicate the minority shareholders' understanding of its financial statements and true fundamentals. In recent years, Edenor has paid EASA an annual financial services fee of 2.5 million USD, which could be considered a dividend only paid to majority shareholders.
We assess the value of Edenor's stock by applying a free cash flow to equity approach, because free cash flow to the firm failed at showing changes in debt. To compute the cost of equity, we ran several regressions to test the use of capital asset pricing model, but we found no significant coefficient and huge deviation. So we combined two alternative models to developed by Goldman Sachs and Salomon Smith Barney for emerging markets. In our model, the cost of equity consists in the sum of three components: the risk-free rate, a modified beta multiplied by US risk premium, and the country risk premium. The modified beta was defined as a ratio between the standard deviation of Argentina Merval Index and S&P, multiplied by a factor that eliminates the correlation between Argentina equity and bond markets. And for the country risk premium, where we use Argentina's MB+, adjusted by a multiplier that accounts the four main risks faced by Edenor: access to the financial market, exposure to political risks, labor union power, and dependency on domestic economy. For the following years, we applied two mean reversion models to show an increase in risk-free and a decline in MB+. Now, as Guadalupe said, we expect a change in rate and subsidy cuts to Edenor. That's why we developed four scenarios, which differ in the magnitude of rate adjustment, capex requirement, repayment debt to Camesa, and subsidy cuts. These scenarios range from shock to no change. We also developed a nationalization scenario, which, by Argentine law, uses a different approach from DCF. Finally, for the terminal value growth rate, we added Edenor annual average sales growth plus the expected shift in energy demand brought by climate change.
In our written report, the probability of occurrence of each scenario depended on who got elected president, Macri or Scioli. After the election's outcome, we've reset these probabilities, also taking into account recent statements of the new government authorities, who are talking about a gradual rate increase. Finally, we arrived at a target price of $12.1, which yielded consistent with relative valuation, sensitivity analysis, and Monte Carlo simulations. So, what's behind Edenor's current market prices? After the post-election euphoria, we believe the market is still focusing on the upcoming rate increase, but is not accurately pricing the necessary cuts to all five sources of subsidies we identified. In fact, current prices are only consistent with a shock scenario, which new authorities have virtually ruled out. We are therefore very confident to issue a sell recommendation. Thank you.
Hi, thank you for your presentation. Can you go back again to the slide where you're explaining why you're not using the WACC to value the company? Yes. And can elaborate a little bit more on that?
Here or here? This one. Here? Or the next one?
The next one. Yeah.
Here.
Yeah. Okay, can you elaborate a little
yes.
bit more on that?
We ran several regressions to test the uses of the capital asset pricing model, but we found between the different years different betas. That's why we said that we find huge deviation between each betas of the different years and the daily and the periodicity of each betas. Also, we found no significant coefficients, so the RQ, R squared are so low. That's why we discovered that the CAPM does not work for this company, and we have to adjust it by applying two models developed for emerging markets, Goldman Sachs and Salomon Smith Barney, that are explained in the next over here. We adjusted the modified beta to give the company a better correlation to Edenor stock. And then we also adjusted the country risk premium because we believe that the company is riskier than the average. So we penalized the normal country risk premium for any company of Argentina by the four main risks faced by Edenor. The main risks faced by Edenor are the political risk and also the dependence on the domestic economy, because the company cannot grow because of the concession that is a geographical concession.
I have two questions for you. The first one relates to the point about not necessarily about rates and what those can be. So the question is, why can't the company aggressively raise tariffs when tariffs are amongst the lowest in the marketplaces that you've studied? And the second question, while you're thinking of that, I'd like to have a little bit more understanding of the peer group comparisons that when you looked at companies in Colombia or wherever else on the slide you looked at. I'd like to understand that a bit. But first of all, your argument is a sell argument, and yet I see tariffs which are super low and could be increased in moderately wealthy areas for limited political costs. So I'm interested as to why that doesn't, or how that factors into your argument.
One second. Could you please put the Yes. As you say, there's a high political cost in raising rates. Raising rates to high-income people wouldn't have a high political cost. The thing is, it's a small percentage of population already does not have part of subsidy. But the thing is that raising rates in a more generalized way really could have a high impact, and also some part of the population, for example the industrial segment, nowadays pays a higher rate than, has less subsidies than the residential segment. Nowadays also we believe that the stock is already discounting, already has incorporated these rate increases that the market is anticipating. So if you could put that one. So here, for example, we can see that when the government mentioned a possible rate adjustment, the stock went double its prices. Here, when Macri had a lot of possibilities of getting elected, the stock rose 60% in 2 weeks. So the price we're suggesting is just how it was in the beginning of last year, but in the recent year and a half or so, the market have really discounted the upcoming rate increase because both presidents talked about the upcoming rate increases, but nowadays Macri is talking about gradualism, and here, for example, we can see he said, "We will have to do it the best way possible, gradually." Then he said again, "We need to do it with gradualism." So we believe it's not likely that a shock scenario will take place, which is the only consistent scenario with current prices. So, sorry, the second question.
The second question was on the relative value of the. So your DCF came to, or sorry, your valuation model based on the Goldman's model and such like came out negative, came out pessimistic. I'm interested as to how that compares with the relative value compared to the peers in the region, and whether those justify the similar pessimism that you have for the company.
We believe that the company will have a rate adjustment, but we believe also that the company will have a lot of subsidy cuts because the governor won't pay the social cost that increased rates in Argentina will be. So, if the company has a rate adjustment, it will have in the same way subsidy cuts. Yes. And the relative valuation we did was not completely consistent with the price. But we believe that the main ratio that in this case will argue the consistent result is this price sales, because the company have a lot of subsidies. So all these ratios are distortions, have distortion because of the subsidies.
Actually, these two first would be negative because EBITDA is negative and earnings are negative without subsidies. That's why we.
Thank you for your excellent presentation. Just a quick one on the possibility to go short the stock. Is it possible to, considering the free float, which is limited to 22%, to manage to borrow the stock in order to short sell it? And if so, what is the rate you would have to pay more or less to sell it short?
In the local market, investors are not allowed to short actions. So in the case of the investors in the local market, they won't be able to short even if they wanted to. So we didn't realize that option.
Okay, and
the biggest part of the stocks are traded in the local market.
Okay, so the ADR could be shorted, but not locally. Okay, thank you very much. And maybe would you have in the sector a long you would recommend compared to that short in order to do a bit of a hedging?
What, sorry?
Would you have a long you would buy rather than this one that you would short, and then or short? Would you have other names in the sector that you think would be long names, more upside?
Other businesses that we would recommend to buy?
Yes.
Okay. Not necessarily. Or maybe yes, we didn't thoroughly investigate other, you're talking about distribution utilities, right?
Yeah, or in Argentina.
Okay, yes, probably most of the other sectors will get better, and so will other distribution companies probably, and or will slowly do so as well. The thing is, currently people over-expected this. Other distribution companies are not as, are not as Edenor is, because the province of Buenos Aires is the province that has most subsidies nowadays and has the lowest rates among local peers because of the importance it has in terms of population, which is kind of, I think, 42%, and the votes that this represents politically. So ELAP, Sur and Edenor, which were the three distribution companies which emerged from the privatization process are nowadays the ones that are worse. But
Let me just ask one quick question. We've probably got 20 seconds. What factor would cause you to change your opinion? What's the most substantial factor that would cause you to change your opinion?
The more important factor that all the income of the company are subsidies. Another thing is that we discount the company at different